Good day traders, hope you're doing well. In this video we're going to have a look at a gold short trade based on the information in the first hour followed by information then in the second hour. We're going to have a look at previous highs and lows just before the first hour, and I'm going to explain to you why I looked for shorts and why I shared this trade in the idea in the community. We're looking at the high time frames, the lower time frames. Highest is usually the 15-minute. But then on the 1 minute, in those time pockets of the first hour, second hour, we're going to have a look at the trade. In this case, you'll see that we wanted to take a short from that fair value gap, but price never really returned to that area. I explained also in the video, then if you look at engulfments from highs and lows, how that could also act as an area for a potential short trade. Altogether, this trade did not give us an entry based on our entry criteria, our conservative entry criteria. It did, however, give an entry based off the aggressive entry criteria. Alright traders, let's have a look at this trade breakdown and how we can incorporate the first, second and third hour of the New York session to find probable trade ideas, and then base our trades off of the information that we get in those time segments. So it's very important to understand then that price is very close related to time, and if we have time on our side and if we have traded at the right time, trading becomes much easier. So let's jump into it. Let's go to the 1 minute and have a look. Okay, so for those being sensitive about bar replay mode, I'm not going to use bar replay. What I'm first going to do is just point out, let's look at the trade idea, and then we're going to look at bigger picture and how there were multiple trade opportunities on this specific day. So first of all, in the first hour, I tend to look at the information just prior to the first hour. So whatever happened just before the first hour, that is often my liquidity points. In this case, we saw a high over there, which would be then our buy side liquidity, and a low down here, which would act as sell side liquidity. So the whole trade idea was for me was to take out buy side liquidity, give a reaction, and then trade down lower towards the sell side liquidity. So we had a break of a swing low or structural point just over there, and then as this broke, I was looking for price to return up, at least up into the fair value gap, and I would place my stop just above. So this was the idea, for it to return up and then continue down towards the sell side liquidity. This is now based off information in the first hour. Okay, so in that first hour, we've made a high. So this is currently the high of day. As this high is being made, it's currently the highest high of the day. So we can have the possibility that the high of the day is set in. Also, if you look at the 50-minute, we are above the previous daily high. Making a high of day above the previous daily high and then breaking down can be an indication the price is willing to go lower. We traded above the buy side liquidity. I was looking for price to return up into this fair value gap. Now that did not happen, but what can we see if we look at an aggressive entry? We have this big rejection candle, well, pin bar on the 1 minute. We are followed by an engulfment of price. So on the lower time frames, on the seconds time frame, you will see a breaking structure, return to fair value gap with this wick, and then a continuation lower. So on the seconds time frame, there was an entry. It also sweep off the high, breaking down that low. That is why engulfment entries works on the high time frame, because on the lower time frames like seconds, you will get that entry pattern that you often look for. So if you had taken it from after that in an engulfment, stop loss above the high, take profit at the low. That would be a low stress, quick run on sell side liquidity for a very quick 3 risk reward trade. But in this case, the 1 hour did not give a confirmation entry. Okay, so let's have a look at what price is showing us the rest of the day. Now, the 1 hour traded made a range with a high and followed by a low. Price then, in the beginning of the first hour, started trading back up, so that the second hour started with price reaching into this order block. It traded into it, broke structure, came back into it, so this could also have been an entry, potentially from the low, stop loss above the high, take profit at the nearest downside liquidity. This is now more of a scalping or intraday session trades. They could have been an entry. If we had held it a little bit longer, you could have maybe gotten some more risk rewards from it. We then continued on to break structure and then return back into the zone, just piercing it and then having this big drop off for a big move. So let's see how that aligns over time. So this was currently the highest high of the session. It sweeps it and trades lower. So take note on how price in the sessions sweeps the previous highs and then trades lower. We sweep a previous high, trades lower. We sweep a previous high, made a higher high in that session. If this higher high has been made in the session, all that's left for the new 1 hour candle is to expand lower towards the sell side liquidity, which is resting below these lows. Hence we see this big push down lower. But again, only aggressive entries, no confirmation pattern entries. But if you understand where price is probably heading to, you can find those entries just as well. Price then in the third hour makes a pullback again and then continues down lower. Now look at this. From discount to premium, reacts off of a zone. The same thing with the first hour, from discount trades up to premium, and so forth. So it's really interesting to see how these levels react off of each other. And basically, it's just 1 hour highs and lows that we're trading from. So you don't even need to be on the 1 minute. You can just look at the higher time frames and then condense that to 1 minute entries. If we look at the 50-minute, which makes this very interesting, is that after we traded above the buy side liquidity, we traded above the high. Look at what this big push down made. We broke structure. We broke a structural point. This now already indicates to us that price is going lower. Now if we look at this structure break and we then look at the order block on the upside, see how price trades into it, respects it, and ultimately gives another strong structure break towards the downside. Where does it return to? To the zone, supply and demand zone, or whatever you want to call it, and then continues to trade further towards the downside, sell side liquidity of the session low made in London session. So this is why I prefer and love trading or taking in consideration the lower time frame 3 hour information, because that gives me a good in New York session, because that gives me a good understanding of where price could be trading to after Asia and London has already traded. Then New York usually completes the daily range. Either it expands further or it retraces into the range already created, so that the daily ends with a wick or as a doji candle, either or a expansion for a full body big daily candle. So I hope that gives some more clarity and insight on using the 1 minute and the 1 hour increments to find tradable opportunities. And this happens every week, either in gold or Nasdaq. Those are the two primarily the main pairs that I've traded this on. I'm not so keen on trading London anymore, since I found the power of looking only at one session, and if I had to choose, it would be the last session of the day, so that you have more information to work with and to make good trading decisions. Guys, that's it from this video. I hope you enjoyed it. I hope it made sense. Please leave your thoughts or comments or questions down in the comments, and I'll be sure to answer them all. Have a great day. Bye.